Hello everyone, it is Sunday, October 31st. Happy Halloween, and welcome to episode 36 of Odds Are, your S&P 500 weekly market forecast. All right, talk about scary. One, it's scary how wrong we were last week in our forecast, but two, it's also scary how this market seems to just keep going higher and higher and higher, and eventually, we're going to have that break, that pause, and I'm kind of worried of what that's going to look like. But let's take a look at what happened last week. See here, we did breach the upper breach point. We also closed above the parabolic SAR, so that's another key thing that we'll dive into here in a second. We did close below the upper settlement limit of 46.09, so we closed within the expected settlement range, and we continued to stretch the top of that Bollinger Band up and up and up. I mean, it almost looks like a straight line going up now. You see how sharp that incline is. And that's part of the scary part, right? So when things just kind of like shoot up like a rocket, eventually they come back down to earth, and they come back down hard. So that's kind of what I'm worried about in this instance. Did not come close to the lower breach point or the lower settlement limit, and we did not get back to that red midline. All right, let's take a look at the moving averages. No surprise, everything's still bullish. Green, green, green across the board. For how long? All right, let's take a look now at the prices or the critical points for next week that we are forecasting. So we are looking at breach points at 45.49 and 46.30 with an 81.31% chance of a breach of one of those 2 points. And we are looking to close within the range of 44.76 to 46.83 with a 79.2% chance of closing within that range. Take a look also at the 42.60, which is now way down there, no man's land. So if we would have to close below 42.60 for us to switch back into a bearish parabolic SAR. All right, I'm going to wrap all this up into the relative view for next week. So one, take a look at that 42.60 all the way down there, but notice that it's actually just in line with the lower end of the Bollinger Band. So it is out of range of everything else, but it's still actually working in conjunction with that Bollinger Band, which is interesting here. And then take a look at the 46.83 upper settlement limit, which is way above the already super extended top end of the Bollinger Band, which is that blue line above the market of the range of the envelope, not the horizontal one. And then we're looking at the settlement range. I think there's no problem us staying within the expected settlement range. Looking at these two, maybe this is the perfect Halloween episode because I am scared to death to call 45.49 again on the lower breach point. Last 2 times I've been wrong, but I mean, I do think that fundamentally we do need to pull back, especially if we are to have a strong holiday season. So typically Black Friday and the Christmas shopping and everything is a boom to the economy and to the markets, but typically we have a little bit of a pullback before then, and that really has not happened. I think it's way too early for this to be the holiday rush, but we will see what happens. All right, let's jump into, if you didn't see that one coming. Well, I definitely didn't see it coming, that we were going to close above the parabolic SAR and that we would just continue to breach the top breach point over and over again. Eventually I'll be right? But again, I always try to make sure I put this out there that when I talk about the 81% chance of a breach, that is not directional. So anytime that I give you guys a little bit of like my thoughts or my opinion on that, that's just me kind of putting the human element on top of the analysis. The analysis is still very much spot on in the sense that it's forecasting a high probability of a breach of one of those 2 points, and we have been breaching those levels consistently just as we predicted. So we are staying within the expected settlement range and we are breaching those points. It just happened to be that I was wrong on which ones I thought were going to get breached. All right, and fittingly, let's take a look at the quote of the week, which is by Mr. Marty Schwartz. Learn to take losses. The most important thing in making money is not letting your losses get out of hand. So let's just take, the calls that I made in the last 2 weeks, for example. Yes, I was wrong. Did I lose money on them? Well, you'll never know. But even if I had lost money on them, right, point is that I'm right more often than I'm wrong, and that when I'm wrong, I don't let the losses get out of control. Now that gets into like all different types of trading strategies, and if you're using options, if you're hedging your positions, if you're using stop losses, all that good jazz. But at the end of the day, whatever method you're using, you have to make sure that you have something in place to control your losses and not let them get out of hand. Because if you lose all of your trading capital, that's it. You're out of the game, right? You got to start from scratch. So the name of the game is to stay in there and let the odds work in your favor. Sometimes you'll be wrong 1 week, sometimes you'll be wrong 2 weeks. Heck, you may even be wrong 3 weeks in a row. But if you look at the series of your trades and you look at your track record and say, okay, over the last 6 months, 9 months, 1 year, 2 years, 5 years, etc., are you trading in a fundamentally sound way with proper risk management and getting a return on your investment that you can live with? If that's the case, then you know what? Mr. Marty Schwartz would be proud of you. All right, so I will leave you guys to go do your trick-or-treating, get your candy. Don't, get too much sugar rush in there. Don't give yourself a headache for the trading session that's about to kick off here shortly for the futures. And I will see you guys here next week. Take care.